I think if they're not, they're very, very foolish because there's this risk of stranded assets whereby if you're a coal company like Coal India and you go out to the public markets and you look to raise capital and money and you know about climate change risk and suddenly climate change risk manifests in the coal price, then your business is very, very vulnerable. And those swift pivots, they can happen very fast. So you have to know about all of the risks, not just the financial risks, but the externalities like climate change and looking after your workers, kind of more social factors. I think carbon footprinting plays a role, but also beyond carbon footprinting, I think you have to do scenario testing. You have to think about what a hypothetical carbon price or a carbon tax would be in the future. And you have to plan for your business, particularly if you're in stranded asset territory, whereby you're an old energy producer, you're part of an old economy, or maybe you're a sugary food producer. How vulnerable are your assets, again, to that very, very swift transition, whether that's climate change related or relating to kind of changing millennial tastes? Yeah, I think it's a good question and it's a fair question. On the one hand, it comes down to kind of capital allocation. So we allocate capital in what we believe are like important businesses for the future, businesses that don't have a kind of social or an environmental impact. So that we call them sustainable economic transition businesses. So that's part one. Make sure you're allocating capital correctly. But even then, businesses that we invest in aren't always perfect. So there is a role for us to play, particularly with kind of medium and large size businesses, to help them to get in a better shape. And we've been measuring our impact probably for 5 years. And what we've seen over the course of that 5 years is reporting companies get better and better at it. And often they view Impax as a kind of like independent consultant who also invests in them. So I think, it is a totally fair question. It's not as direct as being a private market investor, but I think if we're doing both those things right, then we're in good shape.